Let's move on to our corporate voice. Suvankar Sen is the MD and CEO at Senco Gold and Diamonds, here to talk a little bit about gold prices easing, the import cut duty impact, as well as strategies to scale up the business. Thank you for taking time out. And given the fact that, we've been tracking gold prices reaching a record high after the rate cut in the US, I just wanted to get in your outlook, given that earlier in India, we had also seen that custom duty cut. Though 95% of your average inventory is hedged, how does this really impact your financials, the fluctuation in prices?
So there has been two kinds of impact. One is that due to the customs duty cut, the sales that we have seen happening at our stores across India had really gone up for the consumers, the middle, upper middle class consumers. The cut was a great opportunity for them to buy jewelry, buy gold, diamonds, silver, and they availed the opportunity. The wedding season is round the corner. The festive season it was supposed to start, but I think that the duty cut kind of preponed the whole festivities and the whole mood of buying jewelry. So that was something that we saw in the month of August. Just to give you a kind of an idea with numbers, in Q1 we had only grown by about 7.5% in value terms for the whole of 3 months. And when we were seeing the YTD numbers till the end of August, this growth of YTD 7.5% till the end of Q1 had moved up to almost above 15%. So you can imagine the kind of spurt in growth we saw in the month of July, or more so in August. And what we have seen is that the demand from the rural and the smaller towns have been much more than the demand from the bigger cities. This just shows, I think, that the monsoons for the country went pretty well, and I think the mood and sentiment of the smaller towns. And we also saw that, what the numbers we see from the FMCG sector, from the demand from the smaller towns, I think it's coming cutting across the whole fact that yes, small town buying is has gone up and they are in a positive mood. But yes, in terms of the hedging part, we were about 95% hedged. Now hedging happens in two ways. Either you hedge through the MCX exchange by being on the sell side, or you hedge by taking gold loan from the banks where the price is unfixed. So with the movement in prices, you can back to back fix it at the bank, and then that's how you hedge. But that's the problem with the bank hedging through gold loan, is that you are already paid for the duty. So for when the duty cut happened, almost 40 to 50% of our inventory was taken from, as a gold loan from the bank, which we had already paid the duty. So that is the impact. We are assuming that around 50 crore or so will be an impact, and not just us, all the various jewelry companies who have been hedged in their own way on with the taking of gold loan. It's a one-time impact that will happen across various companies. But the exchange hedging that has been done, there you could avail the benefit. So the remaining about 40-50% were hedged on the exchange. So the moment the duty cut happened, the prices came down, and you could get the benefit of the downside that happened. So this is how we have been able to maneuver and travail through the duty cut that happened.
Shivankar, is it going to be a no impact on your margins?
No, there will be slight impact. There will be an impact. We are yet to really determine what exactly will be the impact by the end of the year, because there are steps that we are taking to reduce the impact. Through hedging, through reducing on various costs, because there is an impact of 40-50 crore. You cannot deny it. But how do you manage to reduce that 40-50 crore by cost control, by increasing your diamond jewelry sale, by ensuring that various hedging strategies you can make up for it. So that is something that is there. That 50 crore might get reduced an impact of 30 crore. So in the whole scheme of things, you will see maybe a 0.5% impact on the gross margin. But at the same time, Q1 we had seen that the diamond sales were down. In Q2 we have seen that the diamond jewelry sales will go up. So we'll try to make up for it and say that to reduce the impact of it.
Okay, so there will be an impact, but by how much is the big question. The other question I wanted to discuss with you, Mr. Sen, is about the festive season demand. Now, Q1 was definitely softer, and there were a lot of factors, that led to that. But in Q2, how's the pickup expected to really move?
So the Q2 numbers have been very encouraging. If you look at the July and August, as I already mentioned, that we've actually, from a 7.5% YTD Q1 growth, we have gone upward of 15%. So on an average, if you could see that till the end of August, the growth has been upwards of 20-25%, which I think is thanks to the government for reducing the duty. And I think consumers are very keen. They are looking at the opportunity. Plus, what you saw yesterday with the Fed rates being cut. So there was a huge movement, and that is what I think the investors and the consumers are all looking at, the uncertainty that will remain, and which is there is a tendency of the gold price to move forward. So people were trying to ensure that they could do some kind of buying before any such uncertainties hit into the system and impact the prices. So we are very positive that Q2 will be, Q2 is usually a very slow quarter, but because of this price and duty cut, I'm sure that the Q2 numbers will look very good as we move ahead. And Q3, Navratris will start in October, then the Diwali, Dhanteras, the wedding seasons are going to kick in. And, in the Q1, there were not many weddings, but
Right.
a lot of weddings are all set in the Q3. So I am sure that there will be growth that we could see, in the sector.
Yeah, Q3 is what I wanted to discuss with you, because of course there'll be that festive season demand. So any expectations around what kind of growth could come in? Could it be double digit? And also, since you talked about Navratri, etc., how's been the sales in West Bengal particularly, because of what's happening in terms of the civic unrest there? Because that is a large market for you, and the channel checks have been suggesting us that sales have been on the lower side this time.
So I think, because of what's happened, the mood is somber. The people at large are kind of very depressed and disappointed and saddened, because, Bengal has always been thinking to be intellectually idealistic, and they never appreciate violence, and they don't appreciate such heinous acts. So public wants justice. They want that there must be a solution which is for the betterment of the good of humanity and good of public. So the mood is somber, but the whole consumption pattern I see is restricted to the city. As we move on to the smaller towns outside of Calcutta, while the mood could be somber, but people are transacting. Even in the city itself, if you look at any kind of disruption, there are certain pockets in which the young, I would say, students or people are creating any kind of I would say gatherings. But the other suburban markets around the city, people are getting into the festive mood. There is a shopping festival that is being initiated, and a lot of all the retailers and the brands, they're all getting into the whole festive mood. The buying will start happening. The pandals are getting created. So I think that gradually, there are steps that are being taken against the whoever the culprits are, and people will get back. But at the end of the day, we all understand that whatever has happened, we all are looking to get some kind of positive outcome of it. That's how it is.
Sure. Tell me, what is the store expansion plan? Because a lot of analysts are expecting about almost 60 stores from FY24 to 27. What are your own internal targets, and whether you're adequately funded on your books for that?
Yes, we are. We would like to open about 18 to 20 stores as we planned in the beginning of the year, out of which 8 to 10 stores will be company-owned, company-operated, and the remaining 8 to 10 will be franchisees. So when we go for franchisee stores, there the funds are getting arranged by the franchisee owners. So there we would not need our own funds. But for our company-owned, company-operated stores, like in the Q1, we have already opened about 4 stores. In Q2, we intend to open 3-4 more, and then Q3 we will open further. So we will be able to open about 16 to 18 stores by the end of the year, and the funds are being gathered either through debt, which is, and the reserves that we will be generating through the profits that we will make of the company. So we are adequately kind of funded for the 8 to 10 stores that we would like to open with our own money. Yes.
Right. So good having you on the show, Suvankar, today. Thank you so much for taking the time out.
Thank you.